People in crypto have been wrestling with this fact that Bitcoin and crypto have underperformed other markets this year. Year's not over. The year's not over. We still have 5 weeks left to save this, but it's something that's been talked about a lot, and it is kind of by its nature a bearish thing, right? Why has Bitcoin underperformed? What's going on with this?
Welcome back to another episode of Token Narratives. Shout out to our sponsor, which is Trezor, the OG hardware wallet. Check out Trezor.io, where they've got a Black Friday sale with up to 40% off on select models. David, let's get into it. The markets continue to bleed.
Oh, yeah. Markets are down, sentiment down, calls for this cycle to be over, up. That's where we stand now. I think macro is really leading this in the past week or so. I feel like the macro fears have really taken a hold here. For me personally, a lot of the people that I follow, a lot of the, I would say, leading, smartest people that I follow have started to become cautious, if not outright bearish. So, for example, this amazing account, Citrini, that I follow, he's he focuses more on TradFi stuff, but he's been killing it this year. And he had a comment earlier this week saying that for his latest newsletter, hey guys, basically the gist of it is, hey guys, we might be heading into a recession. And to have this guy say that, it makes me pause. Then you have Lynn Alden. Pretty much everybody knows Lynn Alden. And she was on Monetary Matters with Jack Farley. Great show. And the title of the show, I think, is enough to give you a feeling for her take, which is AI is hiding a weak U.S. economy. Ruh-roh. Then you have news from this past week. Also, the Japanese 30-year sovereign bond, the yield on this thing is at an all-time high. I think ever since its debut in the 90s. This is obviously not good for Japan. It means that people are Japan is having to offer a higher yield to attract people to take on its debt. Japan is in the process of releasing a stimulus package, so that could help. But at the same time, this kind of yen carry trade thing also has implications. So again, you have a lot of kind of big macro things, I think, that are going to tumble or push around smaller markets like crypto. Having said all that, though, Graham, really, I think for the past week and a half, but definitely this week, people in crypto have been wrestling with this fact that Bitcoin and crypto have underperformed other markets this year. Year's not over. The year's not over. We still have, 5 weeks left to save this, but it's something that's been talked about a lot, and it is kind of by its nature a bearish thing, right? Why has Bitcoin underperformed? What's going on with this? And I've seen 2 or 3 kind of major explanations being tossed around. The first is that basically crypto is no longer the main character. It's no longer the speculative darling that it was. That has been taken over by AI and TradFi equity access to these AI companies. And so that hot ball of money that really kind of pushed crypto up into the crazy returns that we saw in the past and the speculative bubbles has now moved on to the new hot shot, which is AI. And so the idea being that crypto now has to kind of stand on its own 2 feet, be valued as you would a normal like sector. And this goes into the second major thing that I've seen on this week, which is the crypto valuations. We've heard this over and over again throughout the years, but crypto valuations are not connected to reality whatsoever. And so none of these things really produce a lot of revenue. And even if they do produce revenue, that then ties them to valuations that are still astronomical. And so a lot of this stuff has to be re-rated to approach reality and or just not be valued at all moving forward. So again, these are kind of bearish, I would right overall bearish. However, the most interesting or the what some of the people I follow considered one of the better explanations for why Bitcoin in particular hasn't performed well this year comes from this TradFi account, Shy Girl, as in like Chicago Girl. I've listened to podcasts for years and spaces, but she had a great explanation, basically saying that it's not as simple as it's one explanation. It's it's several bunch of different things, but basically she says it's like a classic multi-factor deleveraging cascade, right? And this is triggered by kind of the core conceits driving Bitcoin's bull run from 2024 to now, which is the U.S. Fed will be easing, and spot ETFs plus institutional adoption will create a massive bull run, right? And we saw this throughout 2024 and maybe partly in 2025. And so those narratives or those driving forces have ended, and thus you have the reason why Bitcoin is where it is. Basically, 5 factors. There's the macro triggers that kind of we discussed before, which is right now it looks like the Fed is not going to be as dovish as everyone expected. I think earlier in this year, right, the pricing in of cuts was much higher, and now the December cut is below 50%. I think it's like 30%. So that's going to have an effect. You see that the ETFs have been selling of late, right? The inflows have been net outflows, right? The outflows have been greater than the inflows. The that DAT thing is done for the time being, so that sell pressure is over.
Buy pressure.
Sorry, that buy pressure is over. The what's it called? Long-term Bitcoin holders, the thing we've talked about before, these OG whales have been selling the heck out of Bitcoin for the past like 2 or 3 months. I think it's like 800,000 Bitcoin total in 90 days or something. A crazy amount of Bitcoin. And then you had the leverage wipeout still having effects from last month, the 10/10 flash crash. And basically, she's saying that all of these things are contributing to Bitcoin going down, and there really aren't any buyers at these levels right now where we're at. She's constructive, I would say, which is where we're waiting to see where buyers start to step in. And she believes that these OG whales, or even maybe big institutional players, they're just biding their time, right? So they offloaded a bunch higher, and they're happy to step in and buy in big boy size at some level. But where is that going to be? Is it going to be 80, as we've talked about? Will it go below that? I don't know. I felt like this thesis that she laid out was actually quite bullish, and it was measured. It wasn't like the sky's falling. It's just like, yeah, there's all these reasons why buying's not happening here, and she lays it out. It's a long thread, and now it's just kind of a waiting game to see at what point are these people who are very sophisticated going to step in and start gobbling up Bitcoin again.
Yeah. All right, let's get into the bull case.
Well, so there, just to lay out one of the major themes, one of the biggest, I would say, not idiotic. Okay, so one of the major, what do you say, left curved bull cases is the Fed, the current U.S. administration, at some point soon is going to step in because the economy is not doing well. So this is just outside of crypto too, and they're going to start turning on the money printers. And when that happens, it's going to reignite everything. So that's the kind of the base case for that. Some people think that this is a bearish bull case because you're basically relying on some exogenous force to step in and save the market. I don't know. I feel like this is kind of a bullish thing, and we've talked about this since September, right? With Arthur Hayes has said this since September. I think that politicians absolutely will try to step in and save the market, right? They're incentivized to do that, especially going into next year, the midterm election. So this seems very, very plausible, and it's kind of my base case, which is, yeah, the market's going to suffer, but at some point, yeah, this exogenous force is going to step in and make everything go up. So that's one. And we can get into a bunch of other like bullish hopium things. I don't know if you want to show some of these, but like Hunter Horsley of Bitwise, he has been on a tear this past week, releasing post after post on crypto Twitter, really kind of highlighting, I don't use that word, highlighting, AI, really showing where, how far we've come. And to be bearish now seems very short-sighted, right? So he had a major thesis, basically saying one of the reasons that you're getting a lot of sell pressure here in Q3 and Q4 of this year is the remnants of the 4-year cycle. So these big whales are happy to take profits now because even if they don't believe a 4-year cycle is a thing, people do believe it's a thing. And so because people believe it's a thing, it's a self-fulfilling prophecy. This is like the beauty pageant idea, right? They're selling not because they think the 4-year cycle is real, but they think that other people think the 4-year cycle is real. And then if they think other people think the 4-year cycle is real, that's yet another reason to sell, right? And so it becomes a self-fulfilling prophecy. You also he also pointed out that, you know, take a step back and think about who is explaining why we're selling here. And if you go through Web 2 traditional media, you have people on CNBC and Bloomberg talking about this. Like, we're talking about this, right? But we're crypto natives. We're, online retards. But also on CNBC and the fancy studios, the glossy fancy studios, they're doing the same thing. That's a huge difference from even like 3 or 4 years ago, right?
Yeah. In fact, 3 or 4 years ago or 8 years ago, the opposite was the case. So you would have the mainstream media being like, okay, yeah, the bubble's over. Haha, it was all a bubble. Good luck. like Bitcoin's going to zero. Here's Peter Schiff. And then now they're like rationalizing why this is just a healthy correction.
Yeah.
Meanwhile, just to continue with how things have like turned opposite, the crypto natives are all like, it's over, it's over, it's over. See you next year, or see you like in 2027. Right.
Yeah, it's bizarre. It's like bizarro land right here. It's crazy. And then finally, Horsley points out that, again, I've said this in multiple newsletters and even on, I think, Token Narratives the past couple month or so. Their interface, their normal day is talking to traditional financial players, right? They're not talking really to crypto natives because they don't have enough money. And all these financial players are still very constructive on their day to day, right? Bitwise's day to day. They're not talking about, oh, the sky's falling. They're like, okay, so yeah, let's work on our deployment, and we'll start to put money in, and 3 or 4 weeks. They don't really, this short term stuff is pretty not non-existent to them. So when you get a window into that side, it probably would make you a lot more bullish on the medium to long term. So anyway, that's some hopium there. I know you have a thesis that you want to outline from somebody.
Yeah, Jordy Visser. So this is the guy who a few weeks ago wrote the silent IPO thesis that got a lot of attention. That was the thesis that Bitcoin's going through like an IPO, just like Facebook did. So the early investors, Bitcoin has become such a large part of their portfolio that they need to diversify out of it, and there's like public markets available to do that now, the ETFs, and so it can be done, right? And so that's just a natural process that, like, when Facebook IPO'd, you saw sort of a downward price action, not great for quite a while, and then the stock became distributed amongst like a new set of investors, and that set it up for the next 10 years of like high compound annual growth rate. So that was the thesis that he presented before. Now he has published a new article titled "Light at the End of the Turbulence 2." And his core thesis here, which I thought is quite interesting, he's basically saying that actually, now, David, we talked about how crypto is no longer Bitcoin and crypto is no longer like the darling. It's all about stocks and AI, right? That's where all the money's going. His core thesis is actually, as outlined in this article, is that Bitcoin is the purest AI trade. So, from what I understand, the way he's outlined this is like, as AI advances, as the whole AI economy advances, you're going to start to see major problems, right? Like you're going to need to have things like UBI, and you're going to have to see the government stepping in to sort of fix things, right? Like printing, and Bitcoin benefits the most from that. So it's actually the kind of the purest AI play is Bitcoin. I think that's the core part of his thesis. Now, he's also points out that Bitcoin is very similar to AI stocks in that it's still a risk asset. And David, I know this is something you've long said. It's not actually digital gold. It's much more highly correlated with risk assets, i.e., like the AI darlings. And so its recent decline here, in sync with those equities, it's just a normal risk-off behavior. It's not structural weakness. And so he's saying that if these risk assets have a strong 2026, Bitcoin should outperform them. Actually, it's because it's high beta to them. And then he goes on to explain why that's actually likely to happen. That even though we are in kind of an AI bubble, it's still the early stages of the AI bubble. And there's a lot of tailwinds for us here for that bubble to keep going. We're just having a correction in the AI bubble right now, is what he's saying. And some of those tailwinds are fiscal stimulus. You've got the CHIPS Act, infrastructure spending. The one big beautiful bill is going to be flooding the economy with investment, especially front loading it towards the midterms. And then you've got the monetary tailwind. So he's saying that inflation is easing, and that also, by the way, is supported by AI. Right? AI is a lot of people are saying AI is actually deflationary. So inflation's easing. At the same time, labor is softening, so that increases the chances that the Fed is going to cut in 2026 rather than tighten. And let's see. Yeah, specifically for Bitcoins, those are the stimuluses for the tailwinds for the economy at large, the general economy. But for Bitcoin specifically, you've got the Clarity Act coming up. People are not sure when that's going to pass, but it's probably going to happen in 2026, although not guaranteed. Then you've got tokenization scaling. So big financial institutions are moving into real world assets via blockchains, and that strengthens Bitcoin's relevance. So here the thesis is like, look, as the world moves more and more onto stablecoins, and your stablecoins will be used as the medium of exchange. Once you're in the digital realm, though, you're still going to need a store of value, and Bitcoin is the obvious choice there. So this is actually a thesis that I've sort of had in the back of my head for a long time, as with stablecoins. So even way back in 2017, like as the world moves into crypto rails, that's just generally bullish for Bitcoin, because you're just one step closer to moving. If you're already comfortable with holding assets in the digital realm, in the crypto realm, it's a lot easier to then diversify or use Bitcoin as a store of value. And we all know Bitcoin, the world has converged on Bitcoin as the digital store of value.
I mean,
so I think that's, go ahead.
Well, I was just going to say long term that might be true, but in the short term, I don't think it's a store of value right now. It's more like it's a speculative play ish.
Okay.
Right.
Yeah. So maybe store of value is not the right word, but the point remains that once you're in the digital realm via stable coins, you're going to be you're using it as your medium of exchange. You're settling transactions in it, but you don't necessarily want to hold all of your money in US dollars, right? So what are you going to do? Put it into, not necessarily a store of value, but an investment. So you could say Bitcoin is like a NASDAQ, a version of NASDAQ.
Yeah. I mean, I think medium to long term, it is like a store of value like that. I think, but I guess there's multiple parties that you could talk about. The institutions, the people who are buying Bitcoin now, the marginal buyer, I think they do see it as a store of value long term. And so that's why they're buying like that. But for the retail punters, the people who like get into stable coins, I think they see it just as a lottery ticket, speculative play. And that's why that kind of money, the hot ball of money, has moved on, I think, because Bitcoin is maturing. You're not going to 1000x on Bitcoin, right? Or even like a 400x or something like that, which you've seen in these AI stocks and all this kind of crazy stuff. So in that regard, I do feel like, at least thus far, that explains maybe for this year why Bitcoin has underperformed, because the buyer is kind of a more long-term patient player. And right now, you're not just Bitcoin, but in crypto, you're not really seeing these kinds of crazy returns. You're seeing it in stock land. You're seeing it in AI stocks and and all that kind of stuff. And actually, here's what I think though, Graham, is we're getting to a point now where, yeah, stable coins are becoming integrated into Web 2 and TradFi stuff. Like look at Robinhood and PayPal and all this kind of thing. But the opposite is also happening, where tokenized stocks or derivatives that are based off of, like perpetuals that are based off of stocks, are popping up all over the place. They're on Solana now. They're on Hyperliquid, and so in that sense, it's actually stealing or taking away money that would normally be in meme stocks and this kind of crap in crypto. They're still staying on chain, but now they're like, I've seen on my timeline, Hyperliquid has a NVIDIA perpetual, right? I think it launched last week or 2 weeks ago or something like that. And a lot of the traders, some of the bigger name traders, they were playing that. They weren't playing any of the crypto stuff, right? So, in that sense, it's kind of taking away from that part of the crypto market, too.
Yeah, that's a good point.
Right. So I think because of the integration, it actually can kind of weed out some of this lesser stuff in crypto that normally would be getting more attention.
Yeah. So I just want to say though, David, that I am looking very closely at Bitcoin here. I'm really bullish on it. I bought a little bit a few days ago. I'm looking to buy more. I wouldn't be surprised if it actually does go down to as low as 50K. But that's not my base case. I think it's more like I don't think it's going to go lower than, I don't know, 80.
Yeah, I mean,
so I'm scaling
50,
in.
That seems crazy. I feel like at that, if it wicked, it would be a wick. If it wicked to 50, you'd see billions flow into it from like single holders. I feel like, right? Because I mean, that would be just the biggest Christmas gift you could get, right? I feel like.
So even at these levels right now, we're like at 87. I'll probably start DCAing into Bitcoin here. I think the asymmetrical gain, like the risk reward, is better here. Although, yeah, I do think it's not. I think it's going to be kind of a grind here. It's not going to. I don't think we're going to see a quick reversal. But,
yeah, I mean,
I could be wrong.
I think you could see. So, what's the poly market right now for the December cut?
It's 50-50.
Is it 50-50 now? It was like 40% earlier this week. I think if they do cut, and some of the smartest non-crypto macro analysts, like what's his name, Mike Green of Simplify, this guy's as talented as it gets in TradFi. He's the guy who had been pounding the table about passive for more than a decade, and he was right for the right reasons. Anyway, he thinks that there will be a December cut, and I think that kind of surprise could potentially help here. Black Friday's coming up, right? And if the Black Friday numbers are good, as in the sales numbers, that could give you, right, because everyone's worried that the consumer is not spending and things like that. And I know in past years where it seemed like the consumer was weak, and then they just spent just an absolute ungodly amount of money. That could also that could also help like revitalize bullish sentiment. And so I think you could. There are reasons why, even in the shorter term, that you could have a decent reversal going into the new year. But again, I kind of like you. I don't think I wouldn't put that at anything above 50-50 right now. I think that'd be a coin flip right now.
Yeah.
I would point it by next summer. My base case is that the market will be not just crypto, but markets in general will be quite a bit higher than they are now. That's kind of where I think in that medium time frame, because I just see so much spending and stimulus coming online. So
Okay. Now let's talk about altcoins. And I want to talk about why I sold all my Solana earlier this week, which was the last vestiges of my not Bitcoin position. I've still got a few.
Oh wow, really?
That. Yeah. Well, I've got a few. I've still got some hype and a few other whatever. But the last big chunk of my non-Bitcoin holdings was Solana, and I sold it all a few days ago. And I want to take you through the reasons why, and you can tell me why that is also like a bottom signal. But it's all pretty obvious. All right. So first of all, just tactically, I don't think the market has found a bottom yet. I think it's still going to, especially altcoins, I think are still going to go down. Okay. But strategically, I think big picture, I think, Solana and L1s in general are still just extremely overvalued as measured by the actual revenue they generate. Solana is better than Ethereum, but it's still absurdly overvalued if you look at it from like traditional measures. So people are saying that Solana does around $1 billion in annualized revenue. Depends how you calculate it. The market cap is around 75 billion right now. So that's like I don't know, 40 times price to earnings. By comparison, NVIDIA is about the same as that, 40 times price to earnings. NVIDIA, the like most pristine tech play, like what I mean, it has real revenue, real margins, global. It's a real business. Like that, they've been developing this for 20 years or more. Like incredible execution. Solana is a speculative bet that is highly overvalued. As noted in this Substack, David, that you linked to, the retrospectively obvious Substack, this guy says, quote, everything is priced like we're guaranteed 100x usage and 100x fees, price to perfection, no margin of safety, right? So Solana is priced like this whole thing is going to work out. Like it's going to be NASDAQ on the internet, or Ethereum's price like it's going to be the world's supercomputer. But it's very, very unclear whether that will actually happen, right? Beyond that, it's also very unclear how and I've talked about this many times, I'm very skeptical of this. It's very unclear how the value will ever accrue to the L1 token. Like, even if it does work, even if the thesis is right, there's still not much point in holding the tokens. You don't actually need very much of them, especially as like fees go down. Nobody's paying $1,000 for an Ethereum transaction anymore, and that's never going to happen again. So it's just a race to the bottom in terms of like the fees that are going to be generated by these chains. Finally, it's all about apps now, and apps that actually generate real income. And as we've seen, anytime those apps get real traction, they just make their own chain anyway. So I don't know, like I was holding on to Solana thinking that, just like the momentum, the retail trade, it would catch a bid, but I'm out, and I'm happy to be out, and it is probably the bottom, and then I'm going to FOMO back in. But I don't know, David, if you have any thoughts on that.
I mean, I agree with everything you said, 100%. There's two things though that I would maybe I would disagree with the timing, right? Like it's down how much from September? So I mean,
it peaked at like 250 or 280, so
yeah,
it is down quite a bit.
Yeah, and how much further down is it going to go from here? I honestly don't think it's going to go down a lot more. Especially when you have
So you
things
think like Bitcoin?
Well, it'll definitely go down more, right? As Bitcoin goes down, Sol should go down more. But you have a couple things here, which is just the BSOL ETF, right?
Yeah.
17 consecutive days of inflows during all this stuff that's happening now. Now, again, people are like, well, but the price is still going down. That's people who are buying the ETF. That's what they want to hear. They want to hear the price is going down, right? These people are not buying the SOL now for a flip. So as the price goes down, the inflows are going to continue probably at even a higher pace. They're like, oh, great, this is awesome. So I think that provides it cushions the bottom a little bit. And then again, I preface this with I agree with you 100%. So I think you should have sold, I don't know, at the 1010 crash, for example. Maybe it would have been
obviously.
Right, yeah.
Obviously. But should have sold when Trump launched his meme coin. That would have been that was the Pico top.
I also think though that Solana, I've talked about this a little bit, but I mentioned this maybe last week. Solana has been searching for a narrative basically since March, when the meme stuff kind of collapsed. And they haven't had one. But man, they have really jumped on this privacy bandwagon. And we're going to get into privacy a little bit after this. But the privacy thing looks to be, by all accounts now, I'm pretty sold on it as being a kind of a durable narrative going into 2026. And we can talk about why I was a little skeptical about it earlier, but I think it's gonna last quite a while. And I think the Solana royalty, the Solana leadership has really pivoted hard towards this privacy thing, because they saw and because they've been scrambling for a new narrative and not this meme coin crap. Money, power, and money, power, number one, the meme coin thing has a kind of leaves a bad aftertaste. It's kind of garbage, extractive, basically. And number two, meme coins haven't performed, and people have kind of gone to other categories for speculation, like we talked about. So
what? Solana's going to somehow pivot to becoming a privacy coin?
Privacy chain, privacy. It's not that they're going to be they're going to ride the privacy narrative, basically.
How could they do that though?
They're already doing it, right? Like, so they're hosting a privacy hackathon at Point Break in December, which is right after Abu Dhabi, right? They're trying to be tied in as close as possible to Zcash, right? By having all these like intuitive and super easy natural on ramps, off ramps that go into Zcash and out of it without without the user having to do any finagling, right? So again, they're making new privacy focused products. Like think about like Railgun, but on Solana. All that. There's a whole kind of like halo of things. And if they can successfully do this, if they can successfully get on the coattails of this privacy narrative, I think you could see that being the thing that drives up the price, not fundamentals, right?
Yeah, so it's a new narrative.
New narrative.
Yeah, I mean, I don't know. Like, I do buy into this theory that the whole layer ones are gonna outperform thing. What do you call it? The fat protocol thesis.
Yeah, the fat protocol thesis. So that's
I think
basically
that's
been
over.
killed. Yeah, it's done.
Yeah,
I agree.
So, like, I'm just gonna try to keep my eyes out for an app that maybe it's built on Solana, or it's most likely it's going to be on many chains, or it's its own chain that has real revenue and correct tokenomics. It's basically a stock, crypto stock, and that's what I'm going to keep my eye out for, rather than buying back into Solana. At least I'm going to try not to do that. And just one quote here again from that retrospectively obvious Substack. Historically, the winners in every tech cycle are at the user aggregation layer, not the infra layer. The internet made compute storage cheap. Compute/storage cheap. The wealth went to Amazon, Google, Apple, the people who used that cheap infra to serve billions. So I think that the same thing is going to play out. Like, Solana probably is going to bounce. It might catch a narrative, but there's going to be other faster horses that just make more sense as well from an investment perspective, rather than just from a narrative perspective.
Yeah, I mean, they're definitely going to be faster horses. The thing is, are you, Graham Stone, going to be able to identify and then move into those with conviction?
Yeah, that is the question.
That's the question. And anyway, so I honestly, what came to mind that I've been looking at on my radar is Uni. I think Uni. I haven't looked at the price recently. I hope it's gone down a bunch, but I think that could perform very, very well because of the revenue stuff over time. Although, again, there's a lot of it's a hard thing. Like there's a lot of competition for Uniswap right now. Like Airdrome is really going after it, and I don't know. That's a hard thing. So yeah, I have no problem with the Solana sell. I just I wonder if this is the bottom. That's all.
Yeah, it's probably. I mean, look, I held it for a long time. I end up basically being flat on my, like, I guess you could say that I earned the interest. So whatever, 6%, I guess. And then I don't know. I don't want to be underwater on it. I don't want to. So I might.
Yeah, that's fine. Yeah.
But yeah.
So in the chat, we have somebody saying, what is this? No alt season in all caps. So I've seen on the timeline this week talks of an alt season now. And it's very bizarre. I don't know if you saw.
Yeah, Gainsey posted. I mean, Bitcoin dominance has dropped sharply, and that was the Gainsey's post there, right? Like, look, Bitcoin dominance is dropping sharply.
Then there's also this
altcoins have been so wrecked that you're like, okay, it probably makes, and they're universally hated, and so max pain might be that they actually rip here. So,
do you see the icebergy one with the Christmas theme, altcoins versus Bitcoin?
Yeah, I saw that. And by the way, David, I would be sharing my screen here, but Riverside's broken for me. I can't share my screen today.
No worries.
I don't know what happened. I think it might be because we tried to stream to Telegram, but that didn't work.
Interesting. Well, I wonder if I can do it. I've never done it before. I'm not going to do it now, just in case I break things. Um, I personally, we've talked about this a lot. I do not think we're going to have an alt season, and especially when Bitcoin is down like this, right? I just don't. I don't see people being like, "Oh, Bitcoin's down 30% in the past month." Man, that kind of confidence makes me want to put money into riskier crypto assets, right? Like I just don't think
The
that's how
only
it
people
works.
who would do it are crypto natives who think they're smart, and that might be enough for like a mini alt season. But you're not going to get retail piling in, I don't think.
Yeah, and then that's a very that kind of I okay, here's a definition of alt season that I use from past cycles like the 2017, 2021. The alt that kind of alt season is like it's not PvP, right? It almost feels like PvE where everything is going up, right? And um the alt seasons, the little mini alt seasons that we've had for this past year are very PvP, where it feels like you're really playing against other people, and your win is immediately someone else's loss, kind of thing. I don't know if that makes sense, but that's the feeling I get from the kind of little alt seasons we've had this past year. It's get in as fast as you can and get out, and make sure someone is holding your bag, right? Whereas the past alt seasons, it's almost like a game of musical chairs. The the game is quite long, and then at the very end of it, as in when the bubble bursts, then the music stops, and obviously you know it becomes PvP at the end. But for that glorious 2 months, everything is going up, you know. So I don't think that's going to happen until Bitcoin is not just going up, but is going up bigly. But that's just that's my take on the alt season thing. I definitely would not advise people to be jumping into alts, especially shit coins, meme coins. I think that is not. This is not the time nor the place. Uh, Specifically now, do not do it now.
Yeah.
Shall we talk about some of these other topics here?
Yeah. Let's do it.
All right. So we don't have to spend too much time on these, but I just thought these were really interesting. Let's talk about perpetuals. So an interesting thing that came up this week was this big account, crypto Twitter account, the White Whale. I don't know if you know this account, Graham.
Yeah, I read this post.
Basically, this guy was saying like he was a early supporter and user of Hyperliquid, but because of the way Hyperliquid handled the 1010 flash crash, he is, or this person is moving on to new perpetual DEX. In this case, the Solana one, Drift, because Drift
paid him $500,000
probably
to say that.
Yeah, but
come on.
but also yeah. But basically the logic was that Drift's philosophy on handling that crash was to protect the users, as opposed to Hyperliquid, which was completely focused on protecting the protocol. This is what the account said. This is not me. And this sparked a bigger conversation about this kind of stuff. The interesting thing for me, I don't want to dwell on the technical stuff very much, but the conversation very quickly became about perpetuals themselves. And there were some major accounts that were then talking about how perpetuals as a product are actually bad, and they're net extractive, similar to like a pump.fun, and that we basically just need a new killer product, and that perpetuals are not it. And that what happens is that perpetuals, like pump.fun, they extract all this money, and then those users never come back, or they just don't have money to play anymore. And so and perpetuals can kind of look good for a while, right? You're going along, but then you have these kind of dislocations or whatever that happens semi-regularly, and it wipes out everybody. And then those people just don't have any money to continue playing, and the space gets smaller. So I was wondering if you have any feelings
that makes
on this.
sense. Totally makes sense. Look, when you're more than 90% of people lose money when they're trying to trade. Trading is like it's a fool's errand. You have to be like a psycho basically to win at trading and be, I don't know, like plugged into the matrix with all these data sources. You got to be a professional to win at trading. And even the best traders in the world are like, well, I win 50.1% of my trades. And that's why I'm in the game for 20 years, right? No, so just trading, day trading, short-term trading, almost impossible to win. And then you add perpetuals on top of that, leverage on top of that, and it's a guaranteed you're going to lose because all it takes is one wick to wipe you out. What actually works for people is investing in things slowly over a long time period. It's boring. Time in the market beats timing the market. I don't know, that's probably a Warren Buffett thing, but I mean, it's fun, but and I think everybody realizes after they've like dabbled in it for a while that it just you over time you lose, just like with this, sports betting or any type of gambling.
Yeah, I mean, but for me though, I felt like that. I mean, yeah, I agree with you 100%. But basically, they were saying though that perpetuals are bad, but it's like bad compared to what? Compared to options? Compared to futures? Right? Like I think I remember a while ago, 3-4 years ago, there was some Robinhood data that came out, right? And Robinhood is all about options, right? All these degenerates on there are doing options, and it was something like 99% of people's options expire worthless, so they lose, right? They lose money.
You know why it's worse than options, David? It's because it looks easier. It is easier. It's easier. Like with options, you have to you have to be a little more sophisticated to figure out what's going on.
I don't think so, dude. I think it's the opposite. I think options look easier. No, options look easier. They're way more hard. They're way harder, way harder to understand than perpetuals, because you have like the decay of the option. You have to know what the strike, what the at the money price is.
That's what I'm saying. So I'm saying the options are much more difficult to use.
No,
that's what I'm saying. So therefore,
but they're easier to click on. People just click on them. Have you ever? I've used options on Robinhood, the Robinhood app. It's super duper simple. There's like a list, and you click on it, and then that's it. and it's super easy to use.
And so every retailified options, I didn't even know that.
Yes. You should look at the interface. It's crazy simple. There's just still like bars, a list, and like, I'm gonna pay, and it's like $1. It's $1 an option.
Yeah, to me, then it's effectively the same thing. Like they're both extremely risky, but really easy to click the button. They look simple, but like you're going to get wrecked.
Yeah. I mean, that's what I was trying to
get. You can't like if you hold spot, at least, the thing might go down 90%, but at least you're not going to get blown out in like a scam wick.
Yeah. And what do they say? Like, you never lose money until you sell a spot. So
exactly.
Yeah, but I was just trying to think this over though. Like are perpetuals worse than other things? And I don't think they are necessarily. I don't. I do think though that they do. I wonder because I mean options haven't I mean, I guess they do. They rent people out, and then those people maybe never come back. But Robinhood seems to be doing well, and it's all options there basically. So yeah. Anyway, it was an interesting conversation. I yeah, and I personally still think probably perpetuals are a better product than options. So I think there's a reason why perpetuals are gonna like spread and are spreading to TradFi. So that was one thing. Yeah. All right, should we talk about privacy?
Let's do it.
Okay, so the privacy narrative is continuing to dominate, and I think this week really kind of sold me. This week and last week sold me on maybe it's going to be around. It's going to be a big thing in 2026.
Yeah.
Obviously, you have the price action is doing really well. I don't really think that's convincing to me because what happens when the price reverses? Is the narrative still going to continue?
Actually, can I jump in here because I listened to Chris Berninski, an interview with him this morning. He doesn't do very many interviews, but he had a conversation with Raoul Paul, one of my favorite KOLs, favorite permabulls, and he was like, what he wants to look at, what he's looking at for, he's a Zcash bull, but he's looking, what he really wants to see is when at the end of this cycle, where does Zcash bottom? If it bottoms much higher than the current 200-day moving average, which I think he said was $50. It's sitting at $50. If it bottoms not there, but at $250 or something, that is going to be a sign that it's in a broader secular uptrend.
Interesting. Yeah, I like that. But I think I've been skeptical on Zcash's rise. Like, why did it suddenly happen? And why all these KOLs and people suddenly all over it? But Kobe had a really good tweet about it. He said, he talked about being in it since 2015, I think. And how the confluence of things happened right now. It's a very succinct thing. And so that kind of made me feel like, okay, well, this doesn't seem as manufactured, if you will, as I suspected. Then you have things like Vitalik, right? He was in Dev Connect in Buenos Aires this week. And he laid out Ethereum's privacy roadmap. It's a very comprehensive thing. And when you have slow ass Ethereum Foundation, laying out these kind of thorough, big privacy parts coming out, that to me is like, wow, this is an enduring thing, and it's got teeth, right? Because this is being added into kind of the heart of Ethereum over the next however many years. So to me, that's also like a very major sign, like this is coming and it's going to be enduring, even if it kind of the Zcash thrill dies a little bit and it bottoms out wherever. This seems like a very, very long term general trend now. So that made me very that convinced me that we'll be talking a lot about this in 2026. Now, the more interesting stuff, though, on this privacy thing was from Nick Carter this week, and he had two comments that I thought were worthy of discussion. The first was he was talking about how altcoiners, whatever your coin of preference is, they have a tendency to start criticizing Bitcoin and talking about how their coin is going to replace Bitcoin because of all the various flaws of Bitcoin. And he said basically, like, why do these people think that fudding Bitcoin is good for their coin? Because in actuality, it's the exact opposite. If Bitcoin dies for whatever reason, it's going to destroy the confidence that any other coin could replace it. right? And he's saying he's basically saying, and what's this? Aaron von Weerden, former editor in chief of Bitcoin Magazine, said the same basic thing, which is if Bitcoin dies, the blow to the confidence of the entire sector will be so thorough it will take down everything. Because how can anyone with money, with real money, ever really be confident if the flagship, if the most enduring thing has some kind of fatal flaw? So that's one point. I don't know if you have thoughts on that.
Yeah, that makes sense.
Yeah. I think that's probably true, but I would caveat that with it depends on if it's like a bug or something like that versus maybe the security budget, which kind of becomes a problem over 20 years or something like that. I think you can kind of maybe replace Bitcoin with something else over a longer time frame, I guess. I don't know. But yeah, that would be a huge hurdle, right? All right, the second point, though, which I've never had considered, was he said, and the second point is built on the first, which is privacy coins will never, ever replace Bitcoin because of the intrinsic privacy aspect to it, right? Bitcoin is so people believe in it and are so confident about it because of its transparency, visibility, and audibility, right? If there is a problem or if there ever becomes a problem, you can see it instantly and there's so many eyes focused on it. And privacy coins like Zcash or whoever who have like shielded transactions or obfuscation, if there's like a what's it called, a inflation bug or something like that, it's unclear if you will be able to see that this happens, right? And so the privacy actually becomes a impediment to it ever reaching the size of an importance of something like Bitcoin. This is not to say that it can become important, but it'll never ever be the Bitcoin replacement.
Yeah. Yeah, that's interesting. Then you start to think about like we need private digital currency, but it probably why we need that is, I mean, we need a private stable coin more than private store of value, maybe.
Yeah. I mean, that could be like a corollary or something that you could take away from that idea, which is like it you know what it
We
made
need
me
a private
think.
medium of exchange.
Yeah. Even
And
like a privacy layer on Bitcoin, for example. Like you take your
yeah,
Bitcoin and then you wrap it up in some ZK magic or whatever, and then you do stuff with it and then you unwrap it. And that might be a better thing to do than even to have like a privacy coin if you take what he says to be true, right? So anyway, it's a very interesting idea, and he said he came to this realization many years ago because all of these coins, Bitcoin, Ethereum, Monero, and Zcash, all of them have had inflation bugs, right? For Monero and Zcash, it's not completely clear if those inflation bugs were exploited or not because of the privacy nature of the thing. Right. So again, yeah, it's an interesting wrinkle to the whole privacy thing.
Yeah, and if it's like an investment, like you're expecting the price to go up, then an inflation bug like that destroys your investment.
Yeah.
Whereas if it's a medium of exchange, I feel like it doesn't matter as much.
Yeah. Well, you can get in and out of it, right?
Yeah.
Or even better, like
This
this is what I was thinking.
Medium of exchange, right?
Yeah. What I was thinking even better is you take something like Bitcoin and then you move it to a privacy chain, right? you can't inflate that away, right? Like, so you're taking something that's kind of already not gonna, that is going to kind of be impervious to this, and then you move it over to some other thing, and then do private stuff on that. That seems like almost like a better option in that case.
Yeah, it's
So yeah, I thought that was very, very interesting. This is not to say that Zcash can't be important and can't have value, but it would to me say that then it kind of caps the upside, or it caps the importance of it versus something like Bitcoin, or even if you wanted to argue something like Ethereum, because there's that embedded risk that will always exist, right?
Yeah.
Yeah.
All right, you want to touch on quantum here to wrap things up?
Yeah, this is the last one. Again, as we approach the end of the year, right? I'm in the mood to start kind of not navel gazing, but looking back on the year and also looking forward to the next year. And there was another couple stories this week that really kind of hit me in the gut and made me think that yes, 2026 quantum is going to be a huge narrative. We're going to be talking about it a lot. It's really, really important. So there's two stories from this week that made me feel this way. The first, again, Vitalik talking about it at DevConnect, saying this is a kind of a looming existential threat, not just to Bitcoin, but also Ethereum. And he said, we need to do something about it. We have to, right? And I think he even had a quote of, the roadmap for Ethereum is going to have, quote, something like quantum resistance everywhere, right? So he's really banging the drum now. He says it could be very soon that this is going to happen. So it's on the roadmap. It's being taken very seriously by them. And then again, Nick Carter had another post. This actually gave me goosebumps, like for real. He said, he started this off with saying, there's only been a handful of times in my adult life, in my investment life, business life, where I've gotten incredibly obsessed and I can't stop thinking about something. And he rattled them off. And basically his biggest wins in his career. He said this happened every single time, and it's only happened these times. I think the most recent one was in, what was it, 2018, 2019, 2020, about AI. So he's I don't know if you know this, but he invested in AI like in 2020, right? CoreWeave became his biggest win of all time. Not related to crypto. It was even bigger than that. So before that, it was other huge things, giant narratives that he caught years before they materialized. Anyway, this is all to say, he was like, I've had that feeling now about the threat of quantum. It's like, and to me, I was like, whoa, okay, that's scary, right? This guy's has got an amazing track record. It's only this kind of, I guess you'd say, sixth sense or hunch has only happened to him a handful of times. It's happening to him now about quantum. Time to really talk about this a lot, I guess, Graham, and be serious about it. Yeah. So that was a big eye-opening week for me about quantum. And we've talked about it a little bit. We've had one person on Token Narratives about it, but I think we should probably start paying more attention to it and get more into this.
Yeah. The problem is it's really hard to know what the state of the quantum industry is. Like, there's it's a bit of a bubble right now. There's a lot of investment going into it. People are making a lot of claims. How do you verify those things? But either way, I think it's definitely coming at some point. At some point, all of crypto is going to have to deal with it. And actually, all of like the internet and finance, not just crypto, I think, is going to have to deal with this.
Definitely.
And
yeah.
so you might as well just start like figuring out ways to get ahead in that cat and mouse game.
The big problem here, though, Graham, is it's, I'm not going to say trivial, but it's so easy for centralized Web 2 services to become quantum resistant because they're a centralized thing. They just do it.
Yeah,
it's
exactly. And so
really
people are saying
hard.
that the 1.1 million Satoshi coins worth whatever it is, like $500 billion or something. I don't know, not that much, like $100 billion. That is like the prize right now for anyone developing quantum.
Yeah, and just like the coordination problem basically is, I don't know, close to intractable for a lot of these things. Ethereum and Solana and all these other altcoin chains are much better situated by the fact that they have kind of a more centralized way to affect change to the underlying architecture. Bitcoin is the one that is going to struggle the most with this,
Perhaps, but I don't know. I feel like with the tradfi-ification of Bitcoin, I don't know, like BlackRock's just going to come out and be like, if the chain gets like attacked, BlackRock's just going to roll it back and be like, this is the new Bitcoin over here.
Yeah, I mean, but aren't the details like harder than that? I mean, this is the thing, is this kind of out of my ability to comprehend right now. I need to look more into the technology, right? Like it's the way that I think Bitcoin is designed makes it much harder to become quantum resistant, right? Even if you have BlackRock say like, now we're going to do, how does that work exactly, right? So
yeah, my understanding is that it's not that hard actually to the tech wise to convert the network to post quantum resistance. The problem is the coordination.
Yeah, I mean that's what I'm talking about. That's what I'm talking about.
Yeah,
exactly.
So that's what I'm saying. If things got really bad, you could just see like the ETF issuers getting together and be like, okay, we have to scrap the original Bitcoin, so we're just gonna like roll back, and here's the new Bitcoin over here.
So what? Like they would just fork the chain, right?
Yeah,
but
and then everyone would just agree that that's the new Bitcoin.
Yeah, but I still think.
And by the way, it's got an extra. It's got perpetual inflation because we're going to need that.
No, but what I'm saying though, Graham, is I think even if you fork it, like into a super hard fork, you still would have trouble because you still have to coordinate with the old accounts. Do you know what I'm talking about? Like the way that you.
Yeah, no, exactly. You're going to have to be like, look, the 1.1 million coins and these ones, they're just done. Those are done. Nobody's allowed to use those anymore on this new chain.
Yeah, exactly. It would basically be like this weird opt-in thing where you have to like get whitelisted basically to have your coins exist on the new chain or something like that, right?
Yeah, exactly.
Yeah. It's dark.
Exactly. That would be the worst case, but I think it can be solved before then. But anyway, like we're just talking, we don't know what we're talking about here. So let's get some more conversations going here with the experts. I think we've got something lined up for BTC, or in the process of getting something lined up for Bitcoin MENA in Abu Dhabi in a few weeks. Hopefully we'll be able to have a good conversation there, a good discussion there, seeing hopefully both sides a quantum fudder versus a quantum denier. If we can get that happening,
that would be awesome.
Great discussion.
Yeah.
All right, let's wrap it up there, David. Thank you for your insights as usual. Thanks to everyone for listening. Catch us on Tuesday this week. We're doing, Monday night in the the US for our weekly news recap. We'll be back then. Thank you. That's it. We're done. Adios.